Okay, good morning everyone, good afternoon. I'm not taking off for a couple hours and I ended up getting ready for my trip last night, so I thought I'd do a live stream today. Again, these live streams are just really about, showing your charts that you guys want to see. We can kind of talk through a few things, just give you guys my read on the market. Again, it's just my read, so we'll just give it a couple minutes and let people join up. You guys, let me know if my audio is okay while we get started. We have about a 20-second delay on YouTube, so let me know if everything sounds good so that we don't miss anything, and we will get started. And again, I'm going to go through the comments, the subscriber comments, and we'll just cover charts that you guys want to look at, and just talk through the various topics. We do, it's really interesting how the headlines are. The media really tries to pinpoint a narrative on price action. So what I mean by that is if the stock market goes up, they'll find some reason, earnings are great and everything's rosy. And if the stock market goes down, they try to pinpoint a narrative on that. And oftentimes it's a false narrative or it's a delayed narrative. And I want to point that out here. I was looking at CNBC. I look at CNBC. I don't use it for, I don't use it for, I don't really believe in what all this stuff is saying, but I do use it to kind of understand what the mainstream is showing to, what the mainstream believes and whatever, what the herd basically believes, because this is the channel, this is what they're using. So I use it to kind of find the information that they're getting, and then that helps me dig down into charts. But one thing I was noticing, when the market was dumping yesterday, this was one of the main headlines right here. Dow drops 500 points, NASDAQ sinks more than 2% on fears of a Russian attack on Ukraine. Okay, so apparently there's a potential, geopolitical thing going on, or it might happen, and who knows, to be honest. But the market's not falling because of that. The market does not care that that is happening, okay? The market is falling 100% because of the Federal Reserve, okay? The market, all it cares about is cheap and easy money. If you remember back in, I think, 2018 or Ukraine invaded, maybe it was like 2016, Ukraine invaded Crimea, and back then, I don't remember the exact time, but Ukraine invaded Crimea and annexed Crimea, which is a part of Ukraine. The market did not care about that. The market continued to march higher. And again, it's all, or Russia invaded Crimea. So it's all about Fed liquidity. It's the fact that the Fed's meeting, an emergency meeting on Monday, that's what all the selling's all about. But the mainstream, they've got, they've got this posted all over, wanting you to believe that this is the reason why stocks fall, not the Federal Reserve and not their policy mistakes that they've done. So just want to point that out. That is, it's just kind of astonishing how often, how misleading the mainstream news channels can be. And then the other thing is, oftentimes you'll see big drops, and then they'll come out after the fact and tell you why the market dropped. They didn't tell you in advance. Same with a lot of the mainstream guys, they'll just tell you, hey, this is, this dropped and now you might want to sell it, things like that. Okay, and yeah, again, the market, all it cares about is Fed liquidity, interest rates, and, interest rates and money printing, and QE basically. So any if you take that away, the market goes down. It's pretty binary because the markets are way up here, not on earnings, not on anything except for that. One thing I want to point out is Google. All right, So, I'm sure if you looked at Google after earnings, so your earnings came out right here on February 1st. After earnings, it was up 10%. And, all the mains, all the headlines were how great Google earnings were and how much growth they're going to have. And that's fine. Maybe they will have a lot of growth. I'm not going to, argue against that. I use Google every day. In general, I think it's a pretty good product. But it's not about that. It's about what the market wants to do with that. And in general, you can see that the big holders of Google, which is, a lot of hedge funds, a lot of institutions, they want to get out of the FANG stocks. They see that interest rates are going to rise, and they know that when interest rates rise, tech goes down. So they use the earnings as an opportunity to unload their positions. And if you were holding on to Google or buying Google after earnings based on really good earnings, then you're a bag holder basically. And doesn't mean you're going to be forever a bag holder, but that's what's going on. So you can see, boom, nothing but selling. All right, from earnings, Google's down 12%. All right, so just want to point that out. All right, and let's look at some charts, guys. I'll go through the general market analysis, and then we'll get into some individual stock ideas. I'm going to touch on gold, and then also, and then I'll just go through you guys' comments. Okay, so bigger picture. Here's what I like to do. All right, this is just a lesson that I've learned myself, and if you haven't learned this lesson, maybe just listen up. As markets are trading, and when I have my trading platform open, then I see that 1 minute chart. You see the profit and gain, profit and losses ticking real time. You see the 1 minute's moving all over. You think, oh, now's the time to buy, or now, oh, I gotta get out now. Sometimes it helps to just calm your nerves and take the emotion out of it and just roll back to the larger time frame charts. Okay, so I always am doing that throughout the day. I'm always going through, and my charts are getting pretty messy because I'm doing work over here, but I always roll back to the larger time frames and say, okay, I'm trading based on this chart pattern or this chart, this breakdown on this chart, and has this changed? No, it hasn't changed. Then disregard the little 1 minute, All right, and I don't, the weekly is the bigger picture stuff. I don't trade off of the weekly. I use the daily. It's a little more acute in terms of finding entries and exits and things like that. But the weekly can be your, kind of your northern star in terms of major trends in where the charts are potentially going. Okay, so the weekly chart. Where does it look like we're going now? As far as I can tell, as I roll out, I've got this upward price channel. This is a decade-long bull market in triple Qs, still intact. Triple Qs is still in a bull market. I can't say that it's not, but it doesn't mean that we're not going to come down and tag the major bull market support or even break it. Now we haven't broken it, so I can't say okay, bear market official. When I talk about a bear market in the market, on my channel. I'm talking about the potential to start the bear market. I'm talking about the S&P 500, which is in general is the market. This is basically FANG stocks for the most part. And I'm seeing signs that we're entering a bear market. So I want to start queuing people up for that. I don't think it does anybody any good if we come way down here and crash and I tell everybody that we're in a bear market. I see a lot of YouTubers, all they do is follow price action. Their analysis is like following price action. Hey, this is what this did today, and here's where it might go, or it might do this. I don't know. We have to wait and see. That's basically what the analysis is. I try not to do that. What I try to do is have a little more conviction on my analysis and say, guys, I'm taking the trade right here, and I'm trading it down to these levels, or I'm trading it up to these levels. I give you guys levels to key off of, and then I tell you where you'll be wrong, and then I really try to teach the importance of entry points around those key levels so that we can be wrong small. Okay, that's the name of the game. Here's the bull market in Qs. Here's the overshoot, and I've got to definitely have to clean these up, but here's the overshoot. This is Fed induced. The Fed went crazy, and basically, all right, so we've been holding support, and then we created the secondary trend line right here in blue. All right, so that was all of 2021. The Triple Q is just marching up this trend line. The buy the dippers are buying every single dip, buy the dip, and it worked. Okay. But this dip was different, all right? And if you were looking at a longer term chart, we could tell, okay, this looks different than those previous dips for the last year. But the thing is that the last year's price action and the easy come gains that everyone has made has blinded them. Basically, they're complacent, So they don't realize, and they won't realize for a while, that maybe something's different. So they'll buy the dip initially, which they did. We got a big drop. All right, this is the biggest drop in triple Qs that we've had. Basically from the highs for since COVID, basically. So they bought the dip. And actually Qs was way down here. They bought the dip. It rallied all the way up, peaked its head above the 200-day moving average. On this chart, it's the 40-week, the 40-day. Because we're on a weekly chart. It's the same indicator, same thing. It's just 40-day on a weekly chart. Peaked its head above it and failed. Next week came up to that again, tested again, failed, closing even lower. So it's pretty obvious now that we're going to do this and continue this pattern. Doesn't mean it has to play out, but it's obviously looks exactly like it's going to do that now. Whereas before, when we were bouncing, a lot of people have said, oh, the bottom's in, and it might be. Maybe I'm wrong. But, we're above this 200-day, and I'd heard, we'd recover the 200-day, and that's the thing. You make a lot of money in the market when you're betting something to go one way, and the herd is betting the other way, all right? Which is what I was doing, and Friday was definitely one of the better days I've had in quite a while. And we'll talk about that and why that was, and what's likely to continue. Okay, so again, I'm thinking down here, but right there, I'm really thinking 316 is a potential bounce target next. We obviously have this trend line, so we're probably going to get some sort of a reaction, because that is the major trend line. But here's the thing. We overshot this level. Here's what I think it's going to do. It's going to come down like this, maybe do a weak bounce. I think it's going to break, hit this, bounce back up, and then over time, and I don't know how long this will take, but I think we're going to head down to the bottom of the trend line, down here. Now, once we're down here, I'm not going to be planning on a short or anything like that. The only way I'd be interested in shorting down here is if we break this. But most likely, I'm going to cover all my shorts, and I'll probably cover as we work our way down here at key support levels. I'll probably cover, and then I'll re-short. All right, so that's what I do. It falls down to support, I cover. If it bounces into resistance, I re-short. Sell the rip, all right? You just got to change your mentality. It's not buy the dip and sell the rip. If you can't short, I know a lot of people can't short, and I can't recommend anything. I can't give advice on anything, but there are ETFs that you can short with. They have decay. They're leveraged ETFs. SQQQ is one of them. You can go long this, and you'll see here, this is a Ultra Pro short. I think it's 2 times leveraged, I believe. So it will have decay. You don't want to buy these and hold these long term. These are not like an investment vehicle, but you can hold these things more. You can hold these things for weeks, maybe even a couple months. And the decay is not actually going to eat you away. It actually can work in your favor. It's just if the market grinds sideways, the decay is going to eat you to death on these things. So I don't prefer these personally because they have that decay, and I don't like any time element worked into my analysis. That's why I don't trade options. because options can make you a ton of money if you get the direction right. And if you know how to trade options and you can do it right, more power to you. My analysis, if you've noticed, I try to keep everything as simple as I possibly can without, while still giving me accurate analysis and giving me enough information to get the trend and trade right. And so I don't trade options, and I don't usually do these either. Usually if I'm going to do these, I'll do it for like a day trade. I'll jump into these things, but for the most part, I just short. I sell short. But there are ways to do that. And then and if you don't want to go short at all, you just don't feel comfortable, then maybe you can use the rips as an opportunity to exit long positions. All right, that's an opportunity. Nothing says you have to profit on the downside. You can just hold cash and wait for an opportunity. Guys, I do have to tell you though, the cash play with the inflation running, I don't think the Fed's going to be able to get above that inflation reading. I do think inflation's going to be running hotter than the real interest rates probably for the next decade, because that inflation is starting to get embedded. People are getting raises based on that inflation. Social Security's going up based on that inflation reading. And people are buying things based on that inflation reading. So that inflation reading is getting embedded. The Fed's going to start hiking rates, but they can't just hike it up to 7-8% and get ahead of it. If they do that, Great Depression time in America, all right, in my opinion. And they're just not going to do that. So likely inflation's going to run hot. I own some international stocks. I've have some other accounts, just more investing accounts that I've been directing over to international funds, and those are up for the year. One of my accounts is up, and I don't really trade in it, but it is up almost 8%, 9% maybe roughly for the year. So clearly there's money, there's money flowing into international stocks. And that's the other thing. Like, they're not going to talk about that in CNBC, right? They're always going to promote the U.S. stuff. You don't always have to invest in U.S. stocks. There's various ways to get into international stocks as well. All right, that's enough on that one, guys. I'm going to get into some charts that you guys want me to look at, but I do want to cover gold real quick. Yeah, that's interesting. I've been playing with this one. If I go to the daily, I really was trying. See, I kind of adjusted this. I was doing it on my phone though. But if I, maybe it's something like that. I can't say that we've had that breakout yet. It just wasn't enough. Maybe we've got something like this, or maybe we grab this one here. That's probably the most accurate. So, yeah. Look, we tagged it here, tagged it here, tagged it there, tagged it there. A couple overshoots each time, but that's probably the capture of the most data points. And that, I could say that's a breakout. So we're going to go with that for now. We have a breakout in gold. If you want to give it the benefit of the doubt, you could maybe draw a secondary trend line to connect the exact highs here. But I think that's a breakout. So what I'd want to see, though, is a confirmation on this. I'm already loaded up long on these miners pretty heavily. So, the miners ripped to the upside yesterday. I'll continue to add to these if I get confirmation. But what I'd like to see is more upside, all right? And then if that this is early in what is probably going to be the next leg higher in a bull market. So again, here's your bull market on the daily chart, right? I show this all the time, but I'm just trying to keep everyone kind of centered through the price action. And there it is. So we're in a bull market. Nothing's changed. Bull market. You want to buy at support. We've had, this is where the retail money, this is where the Robinhood people were buying. Back here, I remember seeing that GLD was one of the highest traded ETFs during that time. All right, so that's a red flag. But we've had a big long correction. We exited all our mining. I exited all my mining positions up in here, and then big long correction. And then we've been starting to build a position back down at this level, down at 1683 in gold. And I buy the miners, but so big long boring correction. All right, there's no hot speculative money. chasing momentum in this thing right now. They will come when, if we continue that next leg higher. You'll start to see on CNBC how gold's amazing and all that. All right, but you're not going to see it now. You're going to see it after a lot of the gains are already made. All right, so I think maybe a breakout. It is a breakout. All right, we're going to treat it as such. But the Fed is meeting on Monday, so that's one of those things where it's like, well, we broke out right ahead of an emergency Fed meeting where they might do a 0.5 point emergency rate hike, and I don't know what that's going to do. This might be a false breakout. All right, so maybe you want to wait till after the Fed, but you might give up some gains. Again, I've been buying these miners all along support, so for me, I'm well in the profit on these. Okay, guys, and that's gold. And now I'm going to go through the subscriber comments and we'll look at what you guys want me to look at. All right, I'm going to start at the top. Asana. Kickback rally. As far as I can tell, sell the rip. All right. The bottom's not in for these things. The bottom in these things will likely come. I think that the big swoon down in these things might be over, but these things, I think, all right, here's the thing. You've got on Asana, you've got support right in here. This doesn't have a ton of history, but you have support here. Looks like we can probably mark out some sort of a longer term trend line like that. And then we haven't even hit that horizontal support that I had marked out there. They stepped in early. All right, so as far as I can tell, kick back to resistance. That's, look, that's resistance right there. I had that marked out 62.03. Overshot it a little bit because, again, expect overshoots of levels. All right, you have to look for that. Overshot it, close the week right there on it. If you rolled out to the weekly chart, you'd see, looks a little different there. Looks like we just had a kickback right at resistance. All right, so it's sell the rip. All right, and I think we're going down here. That will likely come, and we'll probably see the FANG stock sell off too, and then maybe we've got a bottom down there. I don't know, but I would assume that's I wouldn't want to be shorting Asana down here. Right there, yeah, I would probably take a short there. I'd feel comfortable with that. We've got another 35% to the downside from there. And then, that's probably what I would do on that one. You did have bullish divergence. I can't, look at that. There is bullish divergence. It's intact. So what I think we probably can, look, bullish divergence isn't a reason to just get long, all right? You don't just get long because of bullish divergence, just the same as you don't just get short because of negative divergence. It's just a mere indication of a setup. So what I would do, maybe, I think we probably got that next leg down to here, and that's probably going to put in another divergent low. All right, we'll probably have bullish divergence again down here. That might be an area that I'd be interested in going long this thing. We'll see. Got to see what the other market's doing. The other thing is that as far as I can tell, the main market is bear flagging, making the next leg lower. So that's the general tide or the river of the entire market's going to sell off. You don't want to be long a super speculative tech stock when you see when the general market's going to be selling off. You want to align your trades the best you can. All right. Yeah, well, thanks, Joe. Appreciate that. My channel is never going to be a big channel. I think that, maybe that's a benefit to all of us. It's, my channel is never going to be a big channel just because of, this is dry content. We're looking at charts, right? It's only exciting when you look at your bank account and you made money that day based on a trade. That's what's exciting. But if you're not patient enough and you want to be entertained, then you got to go to those other guys like Meet Kevin and things like that. They're not going to help you make money, but maybe they'll entertain you and make make your life more bearable. I don't know. I prefer to make money, but. And for entertainment, we go to Disneyland. All right. I got to scroll through. All right, Intel. Look, Intel broke down. All right, Intel already broke down. Intel to me looks like it's in a bear market. If I go to the weekly chart here, there's your 2009 lows in Intel. Here's your bull market over the last decade or so in Intel. One little false breakdown. It looked like it was the real deal there, but they recovered it. Likely just the Fed was pumping money. This is back in 2020, so they bought everything. A lot of people feel like they're stock market geniuses because they made money in 2020 and 2021, but because they're like, oh well, I bought this and it did so good. If you bought anything, it did good. It did good, basically. So, and if you're still in those things that made money in 2020, then you've probably given it all back because a lot of those spec names have given it all back. All right, so there's another breakdown, back test. Look, I think this is the real deal. So down 38, all right, good level of support down there. There's also some good support right here at 43. These are the two levels that we'll probably be messing around with for the next coming months. 43's, we'll call it 44, all right in there. Probably going to get a bounce here. It'll probably do this. And then I think it's going to break and head down here. And we'll get a bounce here. We'll probably chop around here for a while. And that's about 38, all right? So 44 down to 38 are key levels that we'll be playing around with on that one, I believe. Viacom. Yeah. So I think Viacom, I don't know. I mean, I could see, look, you got big resistance right here at 42. So, I think we're heading up there about 42. Maybe we'll break, maybe not, but I don't see any real bullish divergence. Yeah, not really that interesting to me. But that's kind of a key pivot level. We might hit 42 and reject and start a bear market as well. But I think probably going to run up and hit that. Good evening. Someone in Italy. That's awesome. My grandfather immigrated from a place in Italy called Ferentino, which is a small town south of Rome. Okay. XLF. Financials. Okay, so the financials have been relatively strong. This is all based off of, the interest rate hikes, thinking that the banks are going to be strong. I don't know if I'm in that court of banks are going to be strong because of interest rate hikes. The thing is that if we're going to get weakness in the market, we're probably going to get, everybody's loaded in tech, all right? You just have to realize that. Hedge funds, the public, everybody's corralled into tech. And that's just data. The FANG stocks are crowded. It's a crowded trade. If you get the tech stocks selling off, then maybe you're going to get a wealth effect thing where people they're going to get scared and not want to spend and borrow, and that's going to hurt the banks. Now when I look at XLF, all right, so we made another divergent. This is your last divergent high right here. All right, we had a bearish rising wedge. We broke. Obviously got a big sell signal. It's chopping. This thing's chopping on us. Big sideways price action like that. Look, we've got like the exact same pattern. If I go to the hourly, I've got another bearish rising wedge, it looks like. Yeah, or not really a wedge, more like just an upward price channel. You could maybe mark it like that. And we broke again, so it's kind of the exact same pattern, basically. you know, not an area I'm interested in shorting right now, to be honest. We're still above the 200-day. We're kind of chopping sideways. And if I go to the weekly, I'm sure we've got, big negative divergence that's been building on the weekly. See it right there? And it's on the daily as well, but, there it is on the weekly. So, I think we're heading lower. If I had to, we're just kind of basing out, and then I think we're going to do this, come down to this trend line. This is coming off your 2011 area. We've had lots of reactions on the weekly chart on this one, from above and below. Big gap right there. That's a reaction. Kind of hung out right there, held support. All right, so I think we're heading down there. 33, and then we'll see. We'll see where, I don't know from there, but probably another 15% or so down. All right, I'm going to keep moving on, guys. I'm trying to just do one per person. SQ carving out a bottom. Maybe. Let's look. All right, so SQ, I believe, is heading down to this 84 area. Big support. I've got that marked out as good support down there. And as I roll out, this is the daily chart. I don't see a bottom in this at all. Look, you don't have bullish divergence. There is negative momentum. This price action here, look at the momentum just dropping off. Yeah, you could say maybe we're starting to really, on the very short time frame, putting in some bullish divergence on the hourly. But for me, when I look at this, if I go to the hourly, yeah, I mean, a little bit of negative divergence, or bullish divergence as we pop down on the hourly here. Nothing on the daily. And we got a big level of support just underneath. So I think another leg lower, to be honest. And then we're going to probably put in a bottom down there. 83.60. Doesn't mean we can't bounce though here and rally into resistance, then roll over, because we're right in the middle of the range, kind of resistance right there, support right there. So it's not, I'm not interested in taking a trade middle of the range. If it rallies into resistance, yeah, I'd probably be interested. We'll look at that. Otherwise, down here. Starbucks. All right, so support, yeah, Starbucks. I've got this level marked out at 94 on Starbucks. Just extend that. There's basically a gap right here, so I was thinking, okay, we'll probably fill that gap and close the day right there on that support. Starting bullish divergence on the daily. All right, just starting it. So spiking down, making new lows, and those are divergent lows as of right now. At support, yeah. And look at this one. If I extend that out, look, there's another gap right there. Gap there. Looks like a support zone to me. So I like this one long. In there. Anywhere in there. If you spike down 91.50, that's even better support. I think it makes sense for a long right down there. But, and this is a defensive play. So it's not going to, it's already come off pretty good. It had a head and shoulders top. It's probably, look here, see here's a shoulder, there's the head, there's a shoulder. And the neckline is right here. So what you do is you take that and you go like that. And yeah, it pretty much puts us in the area. We've hit the projected target. This looks good to me as a long. All right, so let me mark that one down. That's a potential long for next week. But again, it's not going to just turn the corner on a dime, but you know, you might want to build a position in my opinion. And look, this was resistance right here. All right, that one looks good. Moving on. CLF, steel stocks. Well, you know, I did Alcoa. Oh, they're aluminum actually, right? Yeah. Man, well, I'll cover this one. So I didn't like the price action in this. All my stocks that I actively trade, all the shorts and everything was working on Friday except for this one. It was, you know, it kind of started to work and then just started to rally, and I was pretty much at break even, and I was like, now let's just ditch this one. If it doesn't want to play nice, and while all the other ones are working, I don't want to be in it. All right, so we, so yeah, just rallied into resistance. It's got negative divergence, but it was showing relative strength. So let's move on from that one. Did you say XL or CLF? All right, CLF guys. So there's this bull market. We broke that. Negative divergence. Guys, if you guys are new and you're following along and you're a little bit confused, you know, I think, you know, I try to keep things simple, but check out my course if you haven't done so. It helps me out, you know, as a gesture of good faith, you know, and it also, you know, shows me that you guys are appreciating the content that I'm putting out. And the best benefit is you'll actually learn something. You know, you're going to learn a skill set. This isn't just, you know, give a man a fish. I'm trying to teach you guys to fish here. And so everything in that course are lessons that, you know, all my losses and losing analysis and all the things I've done in the past are all bundled into that course in lessons that you don't have to learn, all right? So, you know, you'll see a lot of different analysis, Bollinger Band analysis, and all kinds of stuff all online. And what I teach is the stuff that has worked for me, all right? And if you follow along long enough, you'll see these trades do work out, most of them. They don't all work out. Nobody bats 100. So I teach how to find those winning trades, how to trade the winning trades, how to, you know, find the charts, and then how to manage risk so that you're, you know, managing the winning trades and ditching the losers. Risk reward analysis, you know, all that. So that's all in the course. Link in the description of any one of my videos. And I kept the price at 99 bucks. I haven't raised it. I don't have plans to raise it. You know, it's not a lot of money that I make from that kind of stuff, but yeah, it's there for you guys if you're interested in learning. This one, CLF. Yeah. Yeah, not, you know, I mean, you've got, there was some support right in here. Broke, recovered, 200-day back test, broke. I don't know, probably lower. I mean, it's not the cleanest chart. You've got, that's a divergent high there, and that's it. These were not, that was not a divergent high. Downtrend, you know, now that I'm kind of looking at it, you know, we've got like a downtrend where we have lower highs, lower lows. All right, so maybe we continue that downtrend. Possibly all the way down here. This is a level 918, and you've got some more support right here. That's probably your next level of major support is about 1280, 13. That's all I see. Not my favorite for shorting it. You know, I'm more interested in shorting these tech stocks right now, you know, like Tesla. All right. Big down day on Friday, about 5%. And that's nothing for Tesla. You know, we've seen this thing go up 20, 30% a day. This thing can come down 20, 30% a day as well. That won't happen though. So, Tesla wasn't really going up 20 or 30% in a day until it was like a mania when the herd was attacking it and everybody's piling in. So it's not going to go down 20 or 30% until it's a panic sell and it's, ultimate fear when the herd is just panic selling. So in the beginning, we get 5% down days, all right? And then in the end, we get those 20% down days. We start seeing those things, that's likely going to be big drops into key levels of support where we're going to want to exit. I am short this one, and we're still above the 200-day, which is floating right there. This is where it bounced last time, came down to the 200. This is where I covered my short. If you guys go back and look at my video, I talked about, okay, we're at the 200, makes sense to cover here. We're probably going to get a bounce. We did get the bounce. We rallied up, created this kind of plateau. I reshorted the thing. Again, I was looking to reshort the rip, and when the SPY popped above the 200-day a couple days ago or whatever, that was a real key area. I was really highlighted as an area to short, and then back down we go. So we're going to go down to the 200. We'll probably grind around there for a little bit, and I think we're heading lower. We've got some support here at 782.50, and then really, down here. All right, 554.70. All right, so those are the targets I'll have for right now. All right, keep on moving. All right, sorry guys, I gotta speed this up. All right, I got through Tesla and all right, I did SQ Graciela, and I've got mRNA. That's your vaccine one, Moderna. All right, so there's your bull market right there. We broke trend. There's your sell signal. I've covered this already. So your sell signal came here. Big gap down the following day, so that would have been profitable. Huge ripping back test. That was an objective short right there. Now it's collapsed and heading lower. All right, the reason why I say that is, and the reason why, here's the thing. You're probably long this thing. I can't, maybe, I don't know. A lot of people, if you're bottom fishing, I don't think it's time to bottom fish yet, guys. That's the point. So if you're asking me about stocks that have already crashed quite a bit, I don't see a whole lot of signs for bottom fishing. Starbucks looks interesting, but the rest, I'm not seeing it. Look at the negative momentum right here. And we have it there in the RSI. Negative momentum. Oh, if I can mark it out. This line, it doesn't want to click on me. Negative momentum, negative price action, downtrend. All right, downtrend, downtrend. That's all I see. So down here, all right, 94, we'll call it 95. Again, don't count my levels as the 100% levels, give it some room. Whenever I have a key level, if I'm shorting something or going long, I always step in early and cover my trade, get out, I take profit ahead of the level. All right, but that's your next level, I believe. I don't think I'm missing anything there, so yeah, we'll go with that one. And again, this thing was pumped up because of the COVID pandemic. And if, they've sold all the vaccines that they're going to sell. Yeah, there will be marginal amount of vaccines, but I think the money's been made. This was a big money maker for this company. But as far as I can tell, it's over. I don't know. Maybe we'll have little flash things here and there, but all right, guys, I'm gonna keep rolling through. Silver, I did gold analysis. Silver should be the same, maybe with a little higher beta. I got some silver stocks. I got Pan American is one of the ones I own. Not that one. This one hasn't quite broke out yet. I've got this bullish falling wedge, bullish divergence. It has all the setup of everything I look for. So these are areas that I've been buying at support. All right, and now I'm looking for that breakout. Not the best wedge either. I only have 2 reactions, 1, 2. So not my favorite, but I think we're going to break out. And then I also have this ASM one. Again, kind of a bullish falling wedge. Big support right in there at about 71. This is a penny stock, so I don't really want to. I don't want to advertise the penny stocks too much. One penny stock, guys, COE. We grabbed this one as a long trade. Look at that, and you know I've taken some profit. I still have some of it, but this just goes to show that what I'm teaching does work. Not always. Can't guarantee that it'll always work, but again, it's all about, you know, probabilities, right? You want to put the probabilities in your favor. It's like counting cards. You count cards in blackjack, you're going to make money over the long run. Well, same with this. You know, you put the probabilities in your favor. You manage risk. You don't get emotional and go all in on one stock and feel like this is your moonshot. None of that crazy stuff. All right, so this one, again, big downtrend. Our buy signal came right there on February 9th. And from that buy signal, you know, I grabbed it about midday when I noticed it. And, you know, it's up 65% in 2 days. I talked about this one in the past. And I said, if we break to the upside, it's going to be quick. And sure, you know, it should shoot right up to here about 228. And that's probably, you know, makes sense to bail ahead of time, even take profit. I've already started taking profit on this one. You know, I get these penny stock rippers, you know, I start locking in profit on big gains pretty quick, and then I'll just carry a little bit, and that's where that one's at. So this is not a trade anymore. It just wanted to point out what it was a trade and what I did point out in advance. DKNY. Draftkings, is that what that one is? Let's look. I mean, Draftkings hit major support right there at 1849. So, yeah, I mean, it would make sense that, you know, it's, you know, maybe this one's bottomed. Big bullish divergence that had been building. Let me check that out. Yeah, I don't like that. You know, you got the bullish divergence on the RSI, not on the PPO, so kind of mixed signals there. And we got some resistance overhead. We're in the middle of the range. I don't know. Maybe we do this. Maybe we chop around. Who knows? You know, I'd want to be long maybe down here at 1863, but not right up here in the middle. At least for a new position. If you're long and you bought it down here, maybe you just trail your stops. That's probably how I treat it. And look for us to hit resistance at 27.79, and you know, you just trail your stop. I did go over Tesla. Coop? What is Coop? Bear market. All right, this is going back 2017. Here's your bull market. All right, we'll probably have divergent high up here, but let's look. You know, yeah, negative divergence was building there, and you know, big negative divergence there on the PPO. So divergent high, divergent high, divergent high, and you could have, you know, we could have refined this in to find, you know, a tighter trade, but you know, didn't look at it. Down to major trend line. So look, support, support, support. Big long, that's your major bull market trend line. We broke bear market. All right, so probably going lower. You're gonna get big rallies along the way, but again, it's a slope of hope. All right, which means you fall big and then hope, 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 hope. Oops, sorry, and then you fall again. So you've got, you know, there's some support here right in this area. I can see it. You've got bullish divergence. I'm just trying to analyze it for this guy. Bullish divergence right here on the daily. You know, there is some support here. Let me kind of tighten that up and see. It's not the cleanest level, but I'd say it's probably right about there. It's more of a range, but let's say 128.24, somewhere right in there. All right, so this is kind of a support range, it looks like. With bullish divergence, yeah, you could go long here. It would make it's objective. It wouldn't, for me, it would just be a bear market rally. All right, so you would look for resistance levels, and that's where you'd want to exit these things. There's another one right there. It looks like it's not the best, but yeah. Oh, you've got somewhere right in there. All right, so a rally up into these areas would make sense. 16% rally and then a 28. So yeah, that's about 150 and about 165. Again, don't keep those levels super tight. It's a little sloppy. So, but I think you could see a rally. But again, it wouldn't be a long-term investment for me. It would be just a bear market rally trade. Bear markets don't end. Bear markets don't just end in, they don't just crash and then V bottom right to the top. That's not the norm, all right? That happens when you get the Fed going crazy, all right? But in a regular bear market where the Fed's not going crazy, and especially this Fed, which has been handcuffed by inflation, we might not bounce, all right? We might just do this. It might be like what they call an L-shaped bear market where we do this and then just bottom out for years. All right, don't expect this. Everybody thinks that the market just always bounces back after a big sell-off, and that's because, one, if you're new to trading, that's all you've seen since 2018. All right, we crashed, Fed came in, cut interest rates and pumped liquidity. Crashed during COVID, Fed came in, cut interest rates, pumped liquidity. Now we have massive inflation. If we crash and the inflation's still running hot, the Fed doesn't have those tools, and we don't have interest rates either. So just something to notice. The Fed's been cutting interest rates since the 1980s, basically from 18% down to 0, and now we're transitioning. That big cycle is over. So I think we likely could have a bear market and not bounce back, right away. It might take years. And I don't know how long, but if you look at past crashes before the Fed was pumping and stimulating, it's taken 10, 20 years sometimes for stocks to break even. So I'm just saying, you've been warned. Qualcomm. Guys, I'm going to go for another 10 minutes and then we're going to wrap up. So get your picks in. Leave me a thumbs up if you guys haven't done so. We'll just take a second here. Just hit that thumbs up icon. It helps. And then we'll get on with our weekend. And I'll see you guys on Wednesday when I'm done. I'll be back. All right, Qualcomm. Negative divergence right there. Big negative divergence. And as I zoom in, breakdown. I think this is the real deal. A lot of the time, especially in this market with the buy the dip mentality that's been instilled in a lot of the new traders, you get the original breakdown and they buy the dip and it recovers, and then you get the breakdown. Look, if you bought this dip, you're still profitable, but not by much now. So, I think we're going to head down. You've got support down here. 153.67. We got a gap to fill. All right, no change. All right, this one's going lower most likely. And a way to look at this, you can also go with SOXX, which is the semiconductor ETF. Bearish rising wedge here. We overshot it, so that happens sometimes. Overshot it, and then now we've come in. But this overshoot up here was negative divergent. These were divergent highs. High probability of failing. All right, this is an area you don't want to be overzealous and loading up long. Then we broke down, we undercut it, recovered, went up to the top. Now we're breaking down. We're below the 200-day moving average again. This looks like the real deal to me. So I think we're going lower. And I've got some support down here at 390, 383. Again, if this falls, Qualcomm's going down too. This could come down quite a bit, but those levels down there are still another, what, 15, 16, 17% down, with potentially a lot more to go. Soybeans is like raging bullish. Look at least it has been. Yeah, see, look at the momentum. We're just increasing momentum. Making new highs, but they're not divergent highs, so yeah, I just bullish. The trend line looks like it's here, so maybe, maybe we pull back. As far as I can tell, you buy right there at 24.84. I don't see any bullish or any bearish divergence. Yeah, well, I am boring, but you know what? When you make a bunch of money and your son learns about how that works, then that's when it's exciting. All right. Friday was a huge day for me, so I'm going into the weekend, and these trades are all working. Baba. All right, Baba. This one's been really choppy. I think it's pounding out a bottom, guys. I think it's making a bottom. It's messy. I can't get a good read on it. I've taken a shot at it, thought we had it, came back down, I exited. It's really choppy. Bullish divergence, that's building. Looks like we're building a bottom. Yeah. Maybe something like this, all right? This is the best I can probably do on this one is, maybe we've got like a bearish or a bullish falling wedge. Resistance, we didn't quite hit there, but came close. I don't know. We need to see some sort of a breakout. Bullish divergence, so I think we're gonna get it, but maybe you could buy down here. At this point, you buy at support down here, or you buy on the breakout maybe. And just be willing to, keep your stops tight maybe. It's choppy. But yeah, I wouldn't want to short this one. Okay, let's put it that way. If I had to pick a direction, I'd say long, but, we could chop around some more. Copper. Well, let's look at FCX then. I don't know about copper. We'll see. CPER. Kind of a basing pattern, maybe a bull flag. I wouldn't want to short copper right now with the commodities and the inflation thing going on, and I don't see anything in the chart telling me it's a great short. You had a high here, you had a lower high. You're kind of making like this triangle, isometrical triangle pattern. So we got to figure out which way that's going to break. But I don't see any divergence. You've got, that's a lower high in price, lower high in momentum. Not a short. Not really a long. I don't know. It's an indecision right now, so I'm neutral on that one. All right, last one, guys, and then we'll get on with our weekend. Maybe Southern Copper looks good, but Expedia, travel stocks. All right, we can look at Expedia. That's something new. Travel stocks. Yeah, maybe something like this. There was your negative divergence back then. All right, so that pattern's done. Now we look a little closer here. Clear, we've got some support. It's not great support because we only have 2 data points, all right? And I need at least 2. I know I need at least 3. So don't count this trend line as a super valid one. You want to see another reaction. All right, so the one thing that stands out to me, big bearish engulfing candle right there. Grab the right tool. Big bearish engulfing on the daily chart. Let's see what the weekly shows up as. No bear, it's not a bearish engulfing on the weekly, but on the daily you got a bearish engulfing candle. So that's a reversal candlestick. And what you want to see is confirmation, which would be more selling, another red candle basically. Or it could be like a sideways to down candle, but just nothing really up. That's going to confirm a reversal. And if that happens, I think we head down to this trend line, this somewhat trend line. That's a divergent high as well. So look, see that high that it popped up to. I bet it was probably earnings based. Yeah, it was. Everybody's raging at the mouth bullish on earnings. Oh, earnings are great. Look, this thing's up 10% or whatever it was. You know, I guess it was up at some point, 6%? Sold into. Nothing but selling. All right, so take that price action as a lesson. Also, that high that it made was a divergent high. So that was making a new high in price, but on much lower momentum. So that's a tell right there. Okay, I don't take pops and breakouts on new highs with negative divergence. Like I don't take that. So that was divergent high, sold into, bearish engulfing. All right, this is a bearish chart. All right, and the reason why, well, I've laid out the case. So I'd look for down again. This trend line, not my favorite. Let me see if there's any kind of extension on this. You see, it's probably something like this here. I'd probably rather go with like that. I don't know, maybe something like that. We just get more data points when we do that. So, you know, all right, so look, I think we're heading down here. And then, I don't know, probably going to break. But if I was long, I think I'd probably want to exit along. And then you could short potentially. Here's the short that I would do. Here's how I'd set up the short for a trade down to this level. And I'd want to cover at this level. And then if it breaks this trend line, then you could re-short it. That's how I would do it. So you short it, take profit, let it do its thing. Maybe you bounce, maybe you re-short it. And then wait for that break of that trend line. But to this trade, I'd go to the hourly and I'd look at this trend line right here. Yeah, see? I'd go right about there, and we got a sell signal. All right, so support, sell signal right there. Kick back into some resistance and sell the rip. All right, so down. You can. That's what I think. So over the long term, or the days to weeks, I think we head down here. That's a short right there, and we just got the sell signal on Friday. So I would look for, and again, just the way you do it is your hourly chart. You can short it here, and it depends on where we open on Monday. Monday. If we gap way down here, it's not an objective short anymore. But if you open and you're just still in this area, you could short it here and just set a stop, somewhere right above. If you recover that trend line and you continue to grind higher and you see daily closes and start getting closes above this trend line again, then just stop out and take a small loss. But if you're right and it does move lower, then your profit target is down here potentially. So your risk reward is a potential maybe a 3 to 4% loss and a potential gain of 16, 17%. At least a 4 to 1. That's a good risk reward ratio, and that's a good trade. All right, guys. So for that, I'm going to wrap up. You guys have a good weekend. Check out the course. Leave me a thumbs up. Help me out. I'll help you out. And I will see you guys on Wednesday.